All right, you did it. You took the plunge, you did the research, and you hit that buy button. You just bought your very first stock. That's awesome. But now comes the big question. What happens next? You know that feeling, right? That confirmation screen pops up, and just like that, you're officially in the market. Seriously, that's a huge step, and you should totally give yourself a pat on the back for getting started. And then, almost like a split second later, that little voice in your head kicks in. You know the one. Now what? It's the question every single new investor asks. Do I need to watch this thing like a hawk every second of the day? Should I sell if it drops even a little bit? Or do I just pretend it's not there? And listen, here's the absolute most important thing to get right now. Asking that question is 100% normal. Because buying that stock, that wasn't the finish line. Nope, that was the starting gun. Your journey as an investor has officially begun. Okay, so the very first thing we've got to do is shift our mindset. This is huge. We're not playing some video game with flashing numbers. This is a real, fundamental change in how you look at what you just did. So when you look at your screen, what do you see? Probably what's on the left, right? A ticker symbol, numbers going up, numbers going down. It can feel pretty abstract. But what you actually own is what's on the right. You own a small, legitimate piece of a real-life business. You're basically placing a bet on that company's ability to succeed and grow in the future. So let's get this straight. You're not just watching from the sidelines anymore. You're an owner. All right, so now that you're an owner, you're going to notice something pretty much immediately. The price of your stock. Yeah, it moves. A lot, actually. So let's dig into exactly why that happens. Deep down, it really all boils down to one of the first things you learn in economics. Good old supply and demand. Think about it. If a company is crushing it and more people want to own a piece of that success, well, the price is going to get pushed up. On the flip side, if something changes and more people decide they want to sell their shares, the price heads down. It's this constant tug of war. And what's pulling the rope in that tug of war? Oh man, pretty much everything. The company's latest earnings report, big news about the economy, a hot new trend in their industry, heck, even just what investors think might happen down the road. All of this stuff gets thrown into the mix, and that's exactly why those day-to-day price swings can seem totally random. So, when you see your investment is up one day, and then, oops, down the next, just take a deep breath. Remember, that's just the market's natural heartbeat. This daily up and down, this volatility, it's not a grade on your report card. It's not a sign you did something wrong. It's just the market doing its thing. It's completely, totally normal. Okay, so if we know the price is going to bounce around, that leads us right to the next big question. What am I supposed to do about it? What's my strategy? And this right here is where we start thinking like a real long-term investor. This quote really nails it. You know, probably the biggest mistake new investors make is getting glued to their phones, checking their portfolio every 5 minutes, and stressing out about every tiny little dip. But here's the secret. Real successful investing is almost never about what happens in the next 10 minutes. It's about the performance of that business you own over years. Now here's a cool thing that can happen. Sometimes you literally get paid just for being an owner. Some companies, when they're profitable, will actually share some of those profits with you, the shareholder. These little payments are called dividends, and they're like a direct thank you for owning a piece of the company. But it's super important to know that not every company does this. A lot of younger, high-growth companies will take every penny of profit and plow it right back into the business to grow even faster. Neither one of these strategies is better than the other. They're just different ways of creating value for you, the owner. So how do you keep investing without losing your mind watching the daily price charts? Well, let me introduce you to one of the most powerful, battle-tested strategies out there. Dollar cost averaging. It sounds fancy, but it's incredibly simple. Instead of trying to be a genius and time the market perfectly, you just invest a set amount of money on a regular schedule, say, once a month. Sometimes you buy when the price is a little high, and other times you buy when it's on sale. But over the long haul, it all averages out. It takes the guesswork and, honestly, most of the stress right out of the equation. All right, let's kind of zoom out and look at this whole thing from a different angle. Buying that first stock, that wasn't just you moving money around. You basically just enrolled in a class. Yeah, Because now you get to learn stuff that you just can't get from reading a book. You're going to see with your own eyes how a stock reacts when the company releases its earnings. You'll feel how big global news can shake up the whole market. And maybe the most important lesson of all, you're going to learn about yourself, how you react when your money goes up and when it goes down. That self-knowledge is absolutely priceless. So, if there's one thing to take away from all this, it's this quote right here. Success in investing isn't about hitting one home run. It's not about one lucky, brilliant trade. It's a marathon, not a sprint. It's all about learning, staying consistent, and making smart decisions over and over again for a long, long time. I love this way of thinking about it. Buying your first stock, it's not the final exam you have to ace. No way. It's the very first day of school. You just walk through the doors of a classroom where the lessons will continue for years. And honestly, that's what makes this so cool. You've taken that critical first step on this incredible journey of understanding how businesses work, how the economy ticks, and how wealth is built. Your journey is literally just beginning. So the only question left is, what are you going to learn next?